You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Tuesday, 29th day of December, 2020. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. If you can't see the screen I have up, go to our homepage at cfrn.net. On the right-hand side of the page, click the big microphone, follow the instructions. You'll be registered in about 30 seconds, and that will give you one-click access to the show each and every day. What will happen is you'll get an email right before the show each day reminding you the show's about to start. And in that email is a link that you click, and that logs you right into the platform. You're able to join the show, one-click access. That gives you access to the chat box so that you can ask questions and participate in the discussion. On the days you're out of the office, away from your desktop, point any internet-connected browser to cfrn.net/live. There you'll find a live, real-time simulcast of the show as it unfolds. You just won't have access to the chat box. We also stream live on YouTube and Twitter. Our YouTube channel is youtube.com/CFRN, and our Twitter channel, twitter.com/CFRN. Okay, let's open with a word of prayer. Heavenly Father, we thank you today for your blessings, for your mercy, for your grace. We thank you for your healing touch upon Michael as he lingers in the hospital. We praise you and thank you for this day. You've given us another opportunity to appreciate life and to fulfill our mission as your instruments of peace and progress. Forgive us our trespasses as we forgive those who trespass against us. Help us to lead our life via the pattern set by your Son, Jesus. We pray that today you would bless all of our endeavors, guide us in our discussions, enlighten our minds in every decision that we make. Give us your grace that we may effectively do our part as public servants. Bless our plans, programs, and projects so that we may achieve our objectives for your glory. In Jesus' name, amen. Happy Tuesday. Let me give you the numbers from around the world. These are the cash markets, the indices. Now, we've got some important developments today with price hitting the highest weekly trading zone on the S&P. We talked about that yesterday. And the Dow came within just a couple of ticks on the S&P. We actually hit it spot on the Dow. I'll be showing you that later on the charts. That sets a potential reversal in motion. I talked about it yesterday. I'll talk about it again today. But let me give you these numbers real quick. Then Valerie will come in and give us a recap of what happened this morning in the live training room. All right, starting here in the U.S., the Dow is currently up 1 point. NASDAQ is down 33. S&P 500 is up 3. And the Russell 2000 down 33. I guess the threes have it. In the commodity basket, crude oil up 51 cents, trading 48.13 last. That's a gain of a little over 1%. Gold up $5.50, trading 18.85.90 last. Silver down a dime, trading 26.43 last. In the Asian markets at the close, Nikkei posted a gain of 714 points. That's over 2.5%. Shanghai dropped 18. The Hang Seng gained 253 points. That's almost 1%. And in the European markets at the close, FTSE posted a gain of 100 points. That's 1.5%. The DAX fell 28 points. The CAC rose 23. That gives us a mixed day in Asia, a mixed day in the UK. And so far, it's a mixed Radio Tuesday here in the US of A, with the Dow barely hanging on to positive territory, S&P positive by 3, NASDAQ and the Russell both down 33 points. Again, those are the cash markets, or the indices as they're called. At this point, if Valerie's ready, we'll head over there and get a recap of what happened in the live trading room. And if she's there she is, shiny on the spot. When I come back, I'll go over the Concierge Trade Alerts from last night, go over the Logic 247 alerts, talk about some of the things that we were talking about last night in the discussion group. A reminder, if you're on the open house this week, if you haven't installed the indicators, you should. If you haven't tied into Telegram on your phone, on your tablet, on your PC, or your Mac, you really should, because you're missing 70% of the experience if you don't do those two things. So with that, Valerie, I can see your charts. I'll hit mute on my end if you're ready.
Okay, excellent.
You can take it away.
All right, thank you. Hi guys. Again, my focus for these few days that I fill in for Michael as the substitute is to focus on the training and to help traders see our 5-step program and how we look at the markets and make decisions on trades. So, training and education is really my focus. So what we have here is left to right, gold, the euro, crude, and the ES. We'll start with the ES. Let my charts catch up there. Okay. What sticks on my mind when we first started this morning was this big move to the downside, where we really did not have an opportunity to get into the move at all. When we get there, you can see everything happened pretty quickly. Up to that point, we were pretty much going sideways. Was looking for an opportunity here. Should have marked this. I guess I didn't mark it because we weren't really trending. We have a little bit of a lower low here and a lower high, but very weak in the way of trend. That would have been a momentum trade. Would have had a couple of ticks to get your stop to break even. It would have been a break even trade, and then just went sideways, and then boom, the news that we had this morning came out before the market opened. It came out in the pre-market, so this wasn't news generated. But you can see that for all of these moves, there was really no place for us to consider to draw a trend line, to consider getting into any type of momentum trade, because the closes were all equal bottom. So no place to draw a trend line till we got here. And then at that point, it would have been a momentum trade into dynamic support, which we do not do. So all of that move, happened without us, based on our rules. And really, in the live training room, we are a rules-based training environment. And then through here, you can see that we have a bullish cross and a bearish cross, bullish cross. So price was pretty much going sideways. We never really had an opportunity to develop much in the way of a trend again until we took out these lows here. And you can see again, we had these lows were all equal. Okay, so there was nowhere to draw a trend line to give us an opportunity to get into any of that again. So really, there wasn't much that we could do with the ES today. Again, some sideways trading, no real trend. This was an opportunity. This could have been an opportunity. By the rules, it was an opportunity. It looked good. We had a bullish cross. Price pulled away. Price pulled back. But we weren't really trending, by one tick. Okay, so we did not take this opportunity, and as it turns out, if you got into that just based on the rules and this weak trend, it was a profitable trade for you. Okay, and here there was a trend. Don't have this marked. Obviously, I was looking somewhere else. Again, with the focus of education, not really necessarily on the trading itself. Here's an opportunity, another opportunity to have gotten our goal for the day. So you can see, this was a much more significant higher high, and so we are definitely trending here, and that would have been a good opportunity. did take this chance. I picked up a couple of ticks here. In reality, in real time, the cycle was not as steep as this, so it was an opportunity to maybe if it was going to continue the trend here on the ES, we would have had an opportunity to go along with it, but instead it ended up being a couple of ticks profit. Again, there was no trade here. Let's see, it's about 10:30. Dwayne was probably discussing some big picture ideas, so I put a couple of markings on the charts while he was doing that. No, I wasn't going to interrupt him for anything of that nature. And then sideways price action, and then we started trending again. Took this trend line trade. Actually, it was a close above the trend line here, long, and since it was below the MA1, which is this red and blue line on price, we didn't have to consider the dynamic resistance dots, although they ended up being, those along with the red and falling MA1 ended up being resistance, and I never had an opportunity to get my stop to break even, and therefore that was a stop out. But we did begin trending, and that was, by the rules, a good opportunity to go for a long trade. This is another one that I marked. Again, really not trending. I had said that we would like to see an opportunity, like to see the price get back above 37, 34. And this end did too turn around, and would have been a stop out for any of our traders that got into that. At this point, Dwayne was looking at, we had brought up the 30-minute chart, I believe, and we were showing how it was, had a red candle. It was the 11 o'clock. Yeah, it was 11 o'clock. Yes, that's exactly what was happening. And he was indicating how we were on a red candle on the larger time frame, and that the ES was in a pullback to the BBC. Even though we don't use the larger time frames in the live training room, we trade what's in front of us. In the bigger picture of things, that's probably the reason that, well, it is the reason in the large time frame it did not continue to the upside. So what we did is, when we did have an opportunity to take a short trade with the wind at our back from the larger time frame, I did pick up a few ticks there. I think 2 or 3 ticks there. Dwayne was going over the Russell, I think, was falling out of bed at this point, and he was talking about the larger time picture frame, and I just made a note that we were not trending. That's why I would not be drawing any a trend line here to consider getting long. And this has happened after the training room ended, so I'll go ahead and draw trend line here. And even though that moved a little bit, you would have an opportunity here for one or at least to get your stop to break even and pick up a couple of ticks of profit before the market turned around. Here we are trending again now to the downside, and this would have been an opportunity. Flat. And so not until here, then we look at the slingshot and we can see it's not set up for a short trade. So nothing there. So the ES was really tough today. And had a couple of trades here on crude. Picked up some couple of ticks here, 4 or 5 ticks on this first trade. Price moved up, and I took this trade and then explained later this was a bad trade. I shouldn't not have taken it. So in my journal, I'm making an indication that was a bad choice. We had no trend. We did put in this was a lower low. We took these lows out here, so we had a lower low, but we had no lower high. So I had no trend, no commitment in the price of crude to the downside. So I should have passed on this. Instead, I took it and was stopped out. And then here we did have a higher high and higher low, and ended up being a break-even trade. Here's another weak trend. This is kind of the standard this morning. Weak trends, not much in the way of follow through. We had some discussion on this trade about whether we should take trades that close on the trend line, or we really should see should we see a larger portion of the candle beyond the trend line. So that'll be something that we'll want to bring up with Michael next week. It's my understanding that on or above the trend line, with everything else set for a trade in our direction, is valid and viable. And so this was ultimately a break-even trade, and you can see not much action. Here Dwayne was talking, and I made a little oval here on the cycle. Price was looking like it wanted to go to the upside, but our indicators here in the slingshot were showing us that it definitely had a bearish feel and to stay out of anything to the long side. So indicators did their work there. And on the euro, there were a couple of opportunities. This was we were in the crude trade first thing whenever this one fired off. So you can see that was a profitable trade. It certainly would have been at least a break even if you locked in a couple of ticks to cover your commissions as well. Drew a trend line here looking for the possibility of a continuation of the trend and didn't get anything. And here was a nice pullback, bearish cross, price pulls away, price is pulling back to the BBC. Didn't get all the way to the BBC, so we drew a trend line. It had to close below the trend line. Boom. I know one of our traders told me that this is where he got his goal for the day. So there's at least 16 ticks in there. I was doing something else while this move was going on in the euro. And that's really not uncommon. Our traders are often doing their own thing. They're not always watching the 4 charts that Michael is, but they are listening to his commentary. And like this, I was doing something else at this time when this trade triggered, but our trader who was actively trading the euro saw it, took it, profited. So that's the beauty of the training and trading room. It's kind of a dual.
That's our goal. Our goal is to teach our traders how to do this themselves so that they're not dependent on us or anyone else or anything else. Just you and the chart, you and the market. That's all you need. Our goal is to get you from where you are to that place. Back to you.
Okay. There you have it. This was a bounce off the BBC. I took this and profited 3 or 4 ticks here on the euro, more sideways. We had, again, this was another learning opportunity right here. When this candle closed down, you could have taken this trade. It was a valid trade if you could have entered here at 665. But if you waited for the candle to close and couldn't get in there, and you would not have put your sell stop at 660, because then it would have been a momentum trade going into dynamic support. So, here's an opportunity. Is it easy and obvious one? No. Is it one that might be good to pass on? Yes, when you're looking for those high probability opportunities. Dwayne spent quite a bit of time today talking about each trader developing their trading plan. These are the little things like taking momentum trades that each trader has to determine for themselves, depending on where they are in their path to Trader Mountain, how they're going to handle these kinds of situations. So that was a really great teachable moment this morning. Bounce off the BBC to the upside. There was a few ticks of profit there. Yeah, obviously, something else was going on. I think Dwayne was, again, giving us some big picture review of what was going on in some of the guys that were in on the open house were asking about NASDAQ and the Russell. And I think he was talking about the big picture on those. And then the rest of the day was pretty much a sideways fest there. Gold faked me out today. Indicators were showing me that wanted to continue to the upside, and took the trade, had a stop out there. Break even trade when it started to the downside. This would have been a momentum trade into dynamic support, which we're not going to do. And on this particular, I didn't even mark this, didn't see that enough to even mark it in the live training room. But there's a momentum trade here where you would have had an opportunity to pick up a couple of ticks of profit. And then sideways action, then we started trending. There was a weak trend here to the upside. This would have been an opportunity to pick up some profit on a trade there. Could have even, if you were not in this trade, you could have re-entered. There's a couple of ticks of profit there as well. I was late to the party, entered here. And again, this was another bad choice now that I'm reflecting on it. I didn't even realize this during the live training room. We needed to put in a new high. I should not have even considered. So, I feel like that's a fail for the traders who are considering our trading method, because I should not have considered a long trade until we took out these previous highs. Okay, so this is a second example of trader error. Okay, this was a great opportunity. I think there were 22 ticks in that particular short trade. Bearish cross, price pulls away, price pulls back. Boom, get into it. And then again here, a couple opportunities to the upside. Here in hindsight, that looks kind of suspicious. But once we took out, this high, then this was another opportunity to the upside. A lot of sideways travel. It was grinding upward, and we didn't give us much opportunity to get into it. Here, the cycle is flattened in the middle, so we would have stayed away from anything in this time frame. And then when we got the higher high, you can see that the cycle was coming down, and we would not have considered a trade there. So I draw trend lines. I'm a serial trend line drawer, but it doesn't mean that we were necessarily considering trades, once price action played out. But you never know what's going to happen. The high probability thing is to pull back to the BBC and bounce. But we have to also wait and see what's happening with our setup in the slingshot. So I'm always drawing trend lines in anticipation of making my decision about a trade. And then, this move up, there was nothing to do because our slingshot wasn't set up. This was at the very end. It's 11:29, and we had just finished saying a prayer for Michael, and I marked these before I closed the live training room out. So good, bad, and indifferent. Tough day trading today. A lot of lack of follow through. A lot of sideways price action. Good news is that, and so many of those occasions, our indicators kept us out of the mess. And that's all I have. Thank you. Maybe not. Okay. Okay.
Oh, there we go. Okay, got both mics open. All right. Sometimes when I load my platform, the properties box for the horizontal line, well, here, I'll show you exactly what I'm talking about. Oh, I forgot to do the name thing. Let me do that. Okay. Okay. So, shrink this. Cumbersome. That's because all my stuff came untabbed. I've got to rebuild. When you do the tab format like I do, over time you click something just wrong, and see, I'm down to 2 tabs right down here, the Dow and silver. It used to be I had tabs all the way across, but if you click it wrong, it comes undocked. And somebody taught me one time how to redock it, but I don't remember how to do it. Anyway,
okay, I can show you that.
Oh, can you? Okay. Well, the thing I was talking about on the this horizontal line, which is what I use for my weekly trading zones, we have an indicator. This guy right here, indicators, WTZ. You paste in the numbers and it plots the weekly trading zones on the chart for you. I do mine by hand, but when I double click this, sometimes this property box, the only thing in it are like these first few items. None of this other stuff down here is there, and there's no fix except to close the platform and relaunch it. So anyway, okay, so you're going to tell me how to redock? I would love that.
Yes, just you want to do it now or later?
Sure. Yeah, let's do it.
Okay, just grab one of the charts that you want.
Okay, I want to redock this one.
Okay, and so at the very top where right there, right click, make sure it says dockable. Like so, there you go.
Click it.
Click it.
Okay.
All right, now move that around until you get that in the center. Then it's just keep moving that until you see the. It gives you there you go.
That guy.
Yep, and then click. Then just move your cursor to that bottom down-facing arrow.
Okay. Seems like. Come on, baby. Okay, now that I know how, I'll mess with it after we get done here. Okay.
Okay.
So, final analysis on the room. I know we're not doing the typical spreadsheet thing that Michael does, but is there any kind of final recap that you want to throw out there? I know we weren't keeping track the way that we normally do.
Well, I'll tell you, yes, there were wins, losses, and then operator 2, pretty blatant operator errors. So I struck out twice and didn't have to, and I'm giggling, but I really shouldn't, because
well, trading itself is
that's
enough.
The reality.
Trading itself is enough pressure, but when you're trying to do it with a room full of people watching you and critiquing your every move, I mean, I always think about baseball players. Baseball fans are very big on statistics. Every time a baseball player makes an error, it goes on their permanent record. Now think about that. If you're working at a pizza shop and you're the guy that tosses the crust up in the air and spins it around, imagine every time that you fail to catch it, that would go on your permanent record as an error. I mean, how many times a day in normal life do we all make mistakes? You know, in personal life and in our job. I mean, we're human. But baseball players are truly put under a microscope because lots of people who are really rabid baseball fans have their favorite players' stats memorized. So a trader is under that kind of a spotlight even when they're trading by themselves because an error costs money. But when you're doing a difficult job and there's a room full of people watching you, wow, anybody that can stand up under that kind of pressure deserves a bell. And that bell's for you, Valerie.
Well, thank you.
Okay, so we have two different types of alerts. Now, we teach you our methodology in the room. That's part of the reason for the room, is so that you learn how to spot these opportunities yourself without us, without alerts. Okay, so the purpose of the room is to teach you how to read the chart, to understand the strategy, read the indicators, how to enter and exit the positions. Layered on top of that are our bigger picture trade alerts, which, as you're learning the strategy and the methodology, by providing you with these alerts to be long on the S&P or to be short on the Russell, whatever the case may be, it aids in you learning how to spot these opportunities yourself. It's all about finding these little windows of opportunity, these little pockets in the market where we can enter and exit with a high degree of probability and as low a risk as possible. Now, the Logic 247 alerts, those come out around the clock. We start Sunday night, 6 p.m. Eastern, and whenever opportunity presents itself, an alert comes out. It could be 2 a.m., it could be 2 p.m. It's not based on a time clock. It's based on whenever opportunity presents itself, and those are delivered live in real time via telegram. I build into the alerts enough time for you, whoever you are, to hear the alarm. That's when your phone makes the telegram sound, or your PC or your tablet or your Mac. Time for you to finish what you're doing, get to your computer, bring up your charts, and actually see what's about to happen. I don't want you to just trade an alert because it's an alert. I want you to hear the alarm, go to your chart, study the chart, see the reason for the alert. Then, when you're brand new, using the simulator or your demo account, trade the alert. The more times you repeat that process, before you know it, you're starting to see these windows of opportunity before the alarm goes off. That's Logic 247. The Concierge Trade Alerts, which was our original trade alert service, is a bit different. Those don't come out around the clock. It's a static report. It's based on historic price action. I try to get it out as soon as I can after the Globex Open each evening. So this afternoon at 5 p.m. Eastern, that will be the end of Tuesday's session. And tonight at 6 p.m. Eastern, 1 hour later, that begins the Wednesday session, even though it's still Tuesday night. The Concierge Trade Alerts are forward guidance for the entire session. There's two numbers for each market that we cover, a long number and a short number. Once the Concierge Trade Alerts are posted to the CTA channel in Telegram, then you watch price, and if price starts moving towards the long number, then that is building bullish sentiment in you. And if price starts to move towards the short concierge trade number, then you start to see the market through bearish eyes. Okay, it's a way of calibrating what's happening in the market. And are we having an up session? Are we having a down session? So 2 different alerts, one based on current price action, the other based on historic price action. Now often there'll be a logic number, an alert, that matches up perfectly with a concierge trade alert. When that happens, that really deserves a second look, okay? Because the market's giving you a lot of information and it's confirming it through 2 different methodologies. So now that you know what the alerts are, logic, concierge, question in the chat box. Caesar gave you a compliment, Valerie. He said, honesty is more powerful than a superhero. Well said, Caesar. Thank you for that. Okay, so this week so far, Logic 247, since Sunday night at 6 p.m. Eastern, that's when the week starts, we've issued a total of 38 alerts, 2 never triggered, still waiting on the results of 7. So we've had 29 alerts that you could actually take action on. And again, when you're brand new, you need to be trading these in your demo account, in the simulator. In fact, you need to stay in the simulator until you put together 10 consecutive days in a row where you reach your goal in 10 trades or less. Once you accomplish that, our 24/20 blueprint will give you the green light to go live with 1 contract. Then you have a new goal. That's to increase your account balance by $2 grand. Once you do that, the blueprint will give you the green light to add your second contract, and then you continually add, building your trade size until you reach whatever level you're comfortable at. But the key thing is that each time you add an additional contract, increase your trade size, you're adding the additional contract with profit you earned in the market. So 29 alerts that you could take action on, 2 stopped out. That's 7% of the actionable. That's not a typical number. What we averaged over the last 126 weeks, 25 and a half, because we're in week 126 right now, 20% on average do get stopped out. Now, the stop out is based on not risking more than $300 per contract per trade, less when possible, using market structure and a very simple little 3-step methodology that I teach all of our traders. So this is the recap for logic. Now we'll take a look at the individual alerts. Now the ones that we're still waiting on, these are ones that I just posted this morning, but we'll scroll all the way up to Sunday night. Last week, which was week 125, we had 60 alerts total, 44 actionable, 7 stopped out, 16%. Again, that's better than normal. The average is 20%. So the first alert that came out of the gate Sunday night, 6 minutes after the Globex opened. This is Mountain Standard Time, you see. That's the time zone I'm in. Telegram reads the clock on your computer. So if you're on the West Coast, it's going to show West Coast time. If you're on the East Coast, it'll show East Coast. So this was alert number 5,999. That's how many alerts we've issued since we launched Logic 247. So this was a gap fill on the S&P. Market made $450 per contract available. This was alert number 6,000. Now this was a long on the S&P. B means buy, T means initial target. This was a gap fill on the Dow, gap fill on the Russell, and this was just a long on gold. Now there's 2 price targets. There's the T initial target, and then the weekly trading zone, which is the final trade 2 target. Every alert has a final trade 2 target. If it's a long alert, it's going to be the weekly trading zone overhead. If it's a short, it's going to be the weekly trading zone below. So this one, the market made $1,200 available per contract. Market made $270 per contract available here. Silver. Now on this silver, we had 1, 2, 3, 4 targets. I don't do weekly trading zones on silver. I have in the past, but I don't do them on a regular basis. So what PR stands for is potential resistance. So when you go long on silver at 26.33, your initial target's 26.35, 2 penny move in silver is $100, and then the second target, potential resistance, 26.39, potential resistance 26.76, potential resistance 26.90. The market made $525 per contract available. And then this was another long on the S&P 250. And at the time of recap, okay, like the swing high, at the time this recap was done, was 37.15. That was the swing high on price. Now, we know that we've traded almost up to the highest weekly trading zone on the S&P this week, which is 3750/51. I'll show you that on the chart here in a minute. But this is a snapshot in time. This is what it looked when Valerie came through to do the recap. Price had ran up to 37.15. Now, did it eventually go to 17? Yeah. Did it eventually go to 20? Yeah. Did it eventually go to 3730/31? Yeah. It actually almost made it to 50, as I just said. So what this number reflects is what the market had made available at the time Valerie came through and did the recap. Now, the recap is an incredibly tedious and time-consuming job, and Valerie does an excellent job in being accurate, and she always errs on the side of being extremely conservative, which we all appreciate very much. This is a long on the Dow. It's got 1, 2, 3 targets. At the time of the recap, price had risen to 32.35. Price has now risen all the way to the highest weekly zone, which was 30,500/30,505, and we'll walk through that chart in just a moment. Long on the Russell, a long on the NQ, a long on crude, a stop out on gold. Remember, we don't want to risk more than $300 per contract per trade, less when possible. And so this one required a $250 stop loss based on market structure. Crude. Now, in the discussion group last night, again, if you're on the open house, if you have not tied into the Telegram app yet, you're missing a large part of what the open house or the trial is all about, because that's where we discuss everything that's happening in the markets. It's also where we post the alerts. So you just go to telegram.org. It's a free download. It's fast, it's secure, it's free. There's no commercials, no advertising. So in a situation like this, okay, if this is a short and it says hedge crude, then that means there's already a long in the channel. But the long side hasn't triggered yet, and the market looks like it's about to drop. So we'll come in and we'll say, okay, hedge that long alert with the short alert. Get short at 47.80 with initial target at 47.70. And then second target on a short, it's potential support, 47.50. Potential support, 47.20. Okay, $250 per contract at the time the recap was done. And this was a hedge on gold to be short at 18.85 to 84 to the zone at 82.83. And this actually had run $1,200 per contract at the time the recap was done. Okay, now we're into Monday. So all of this happened Sunday night. Most traders don't even think about trading until Monday morning at 9:30 a.m. Eastern. But the global futures market opens Sunday night at 6 p.m. Eastern. So we had 1, 2, well, let's see, if this is $59.99, $5,999. All of this is Sunday night, 6,012. So that's 13 alerts Sunday night, of which one was stopped out based on not risking more than $300 per contract per trade. So then we roll into Monday, and you'll notice the time. This is Mountain Standard, 12:20 a.m., that's midnight. Eastern time, that would be 2:20 a.m., which would be just ahead of the London Open, which is 3 a.m. Eastern. This was a stop out, $275 per contract traded. The second trigger actually ran, to the target, but we only recapped the first trigger. Okay, so if the first trigger is a stop out, then for the record it becomes a stop out, even though it will trigger again in most cases. And in this case, the second time it triggered, it ran to the target. That happens a lot, but it's just too confusing to try to track every trigger because there's so many alerts. On average, there's 50 to 60 alerts every week. This is a long on the Dow, long on the Russell, long on the NQ, and a short on the NQ. I guess I forgot to type hedge in here, but that's the deal. So in this case, we had what's called two-sided action. The long side triggered, and then the short side triggered. This is a long on the Dow, on the S&P, ES. Long on the Dow. Now, PT means that price traveled at least 60% of the distance or better to the initial target. If it doesn't travel at least 60%, then it's considered a stop out. If it goes at least 60% of the way, it gets the PT designation as opposed to the FT. PTs happen when there's not the follow-through that we anticipate. Now, because this one rolled right up to 30460, if it had gone 30461, then that would have mean everybody who had an entry here and an initial target here would have been filled. But because it stopped at 30460 and backed up, depends upon where you were in line. Okay, if you're at the head of the line, you may have gotten filled. If you're at the end of the line, you didn't get filled, because price did not trade through the target. Long on the NQ, long on silver, long on the Dow. Now, sometimes the market will present opportunities, like in this case, there was already a long on the Dow in the channel, but then the market moved in such a way that it made an additional alert available. In fact, if we scroll up, we can see on the YM, it was to be long at 3440, but the market moved in such a way that I spotted a window of opportunity at 3380 up to 3400. Previous alert still valid. Okay, so this one became this one ran the distance, $250 per contract traded, and the original one rolled right up to 30460 but did not trade through it. This one I'm still waiting on. This is a long on the NQ. Still waiting, still waiting. This is a hedge on the Russell. That means there's already, see, here it is. Long side on the Russell, short side on the Russell. Crude, hedge on crude, hedge on gold. I put a long post in the discussion group last night explaining the concept and philosophy behind a hedge in respect to how we use that term in regards to the alerts. And then we're up to today, the 29th. So we're still waiting on quite a few. Now that you've seen all the individual alerts, this might make more sense. 38 total alerts issued, 2 never triggered, still waiting on 7, 29 actionable, 2 stopped out based on not risking more than $300 per contract per trade, less than possible. Now I'm going to give you a chance to take a screenshot if you want of the Concierge Trade Alerts. These are the ones that don't come out around the clock. These come out shortly after the Globex Open. Forward guidance for the entire session. These numbers are good until the following day when the next set of numbers are posted. 2 numbers for each market. Got them out at 6:55 p.m. Eastern, so 55 minutes after the Globex Open. If price starts moving towards 37.35, you develop a bullish sentiment. And if price starts heading towards 37.11, bearish sentiment. When price hits 35, you either want to be long and or only looking for longs above 35. And if price drops to 37.11, you either want to be short at 37.11 or only looking for shorts below 37.11. Everything I do with alerts is a trend trade as defined by the 30-minute chart. If price is above the BBC, we are only going to be looking for long trades on the 30-minute chart. If the 30-minute BBC, if price is below it, we're only going to be looking for short trades. Okay. Now, let me show you what the BBC looks like and how we read it. This is a daily chart. We don't trade off the daily chart, but we use the daily chart so that we stay in touch with the big picture, which is important. I mean, if you look at a daily chart and you see that price got rejected at our highest weekly trading zone and the 50% Fibonacci price extension, which I also went into some detail about last night in the discussion group, and you got this red body, I mean, going long, after looking at this, right, just that one candle right there, going long is financial suicide. Why would you? Why would you try to swim upstream? You won't. We'll teach you not to. We teach you to go with the flow. Path of least resistance. The market's dropping, which it clearly is, then we're going to look for short opportunities. On a day like yesterday, when the market's rising, we're going to be looking for long opportunities. Okay? Now, this yellow line was created by using this tool right here. Most people are familiar with Fibonacci price retracements. The 24, the 38, the 50, the 62. But when price gets into an area where it's never been before, then we use the same 14th century math, the golden ratio, to project into the future where price may find resistance. So we use this tool to connect this low to this high to this retracement low. So it projected this line, and this line into the future. And by golly, look what happened. We hit the 24% Fibonacci price extension. It's both a target and an obstacle. So we hit it, price pulled back, had to take another run at it to get through it. Now the second time it hit it, look what it did. It dropped all the way down to here. So after we hit that 24% price extension, it took 1, 2, 3, 4 sessions to close above it. Once we finally closed above it, that opened the door for us to make a run at the 38% Fibonacci price extension. And we spent 2 days trying to get through it. When price can't get through resistance, it's going to turn around and go look for support. It's like the little Mario character. When he gets to a door that he can't get through, he turns around and goes the other way. So when price hits resistance, it will turn around and go look for support. When price drops to this green line, which we call the BBC, we expect it to be good support till proven otherwise. So the market found support. It made another run at the 38. It finally got through here. And then the next upside target or obstacle is the 50% Fibonacci price extension. It couldn't do it, couldn't do it, couldn't do it. So what does it do? It goes and looks for support. It found support at the 24% Fibonacci price retracement. And from there, look at the bounce. This was a huge red daily candle. But as the session progressed, buyers came in because you got to understand, traders all over the world are looking at the daily S&P chart. Not everybody's looking at a 4-tick range chart. A lot of people look at an hourly chart. Some people look at a 30-minute chart. A lot of people look at a 5-minute chart. But everybody, especially institutions, are watching a daily chart. And so when price does a 24% Fibonacci retracement, or a 38, or a 50, that gets everybody's attention. Now, we talked about this yesterday. The fact that price came down to the 24% fib and made an incredible recovery, is that because there's really something to fibs? Or is it because people believe there's something to it and it therefore becomes a self-fulfilling prophecy? I'll be honest with you, I don't know. However, I do know how price reacts because of the actions that buyers take. Okay, this thing was falling like a rock. Okay, it's that 24% fib. Suddenly buyers swarm in and drive it back up. Gets us back above the BBC. Now this green line, we call it BBC. That just stands for bull, bear, cross. When price crosses below the green line, we're bearish. In other words, we're looking for lower prices. Once price closes back above the green line, now we're bullish, looking for higher prices. That's not just true on the daily chart, it's also true on every time frame. 4 hour, 1 hour, 30 minute, 5 minute, 1 minute, 4-tick range, even a volume chart. I'm going to refresh this chart. There we go. So, today, buyers, this is where the market opened last night, took a little dip, then buyers ran it all the way up to the 50% Fibonacci price extension, which also happens to be the highest weekly trading zone this week for the S&P. Now, the highest weekly trading zone is derived through a process different than Fibonacci price extensions. So this morning, and I talked about this last night, we have two things telling us that 3750 is going to be important to the market. Number one, it's a Fibonacci price extension. Number two, it's our highest weekly trading zone. So you got two things saying, ooh, look at me, look at me. And look at what happened. Remember, we hit the 24. It was an obstacle, knocked us back. Finally got through the 24, hit the 38, obstacle, knocked us back. Finally get through the 38, and it took 2 rally attempts. We finally made it to the 50. Okay. Now there's another extension up here at the 62. So if buyers can rally this thing above this 50% price extension, then the next upside target or obstacle, same thing, 3804, and then 100%, 3971. Now, what is the 50% and the 100%? What does that even mean? Okay, good question. The distance in points from this low to this high. You take that distance in points and you put it on top of this retracement low. So price went from, let's see, the low of this candle was 32.16 and a quarter. The high of this candle the high of that candle is 36.57. So if you take 36.57 minus 3216, whatever number of points that is, if you add that to the low of this candle, 35.34, that's going to give you a 100% price extension. Now, this move is almost vertical, parabolic, straight up, whereas this has been more of a back and forth kind of a move. So whereas this move up took 1, 2, 3, 4, 5, only 6 days. Look at how many days are involved with this move, and we're only at the 50%. We're only at the halfway mark. And it's taken 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 20. It's taken 25 trading sessions to move half as far as we moved in 6 trading sessions. Okay, so now we know where we stand from a daily perspective. Now we can dig into the smaller time frame and look at actual trade setups. I'll use the Concierge Trade Alerts to walk through the charts. If you didn't grab a screenshot, I'll give you one more shot here. If you want to take a screenshot, simplest way to take a screenshot. This snipping tool is built into Windows 10. Just click New, hold down the left mouse button, drag it across, release the left mouse button. Now you have an image that if you right click it, you can send it via email to somebody, you can copy it, paste it into Telegram, paste it into a Word document, or you can save it as some kind of an image. Okay? All right. So now we'll go from the daily S&P to the 30-minute S&P. All alerts are based on the 30-minute chart. Okay. 3750/51 is this week's highest weekly trading zone. Yesterday, I talked about there being 2 windows of opportunity overhead. I put this in the discussion group. And if you check the discussion group, you'll see where it says it's possible that these 2 windows of opportunity could meld together into just one move. So what happened is, as price moved up and filled this window of opportunity, in this space between them, you'll see how we kind of went sideways, but we never closed below the step line. We toyed with it, but we didn't close below it. And then we put in a swing high at 37.47.50. So we came within, actually this one is 37.47.75. So we came within 2.25 points of hitting the highest weekly trading zone. Now we discussed yesterday that anytime the market hits the highest or lowest weekly zone by Tuesday morning, that's an indication that the market very well may reverse there and head in the opposite direction, potentially trading over the course of the week all the way to the lowest weekly trading zone. Now, this week, because it's the end of the year, you have people who will sell their losing stock positions, their stock positions that were not profitable this year. They're going to sell those so that they can count that against their profits when they do their taxes. Futures follow stocks, not the other way around. So this tells us that we may spend the rest of the week going down. The fact that we have end-of-year tax selling coming in this week, it's another reason for the market to decline. Okay. Now, some might say, well, you didn't quite hit the zone. We know that zones are an area, just like fibs are an area. Fibs put an exact price point on your chart, but price doesn't always touch it to the tick. Now with zones, we do get accustomed to price turning on a dime, so to speak, at a zone, but it doesn't have to. Sometimes it'll come really close. Other times it'll spike it. Okay? It's an area, which is why if you're in a long trade, as price approaches the zone, the closer you get to the zone, the higher the probability that it's actually going to touch the zone. But you have to remember that zones are an area. So as price approaches, you've got to be diligent with your stop loss, okay? Because it may not touch it to the tick. Now the Concierge Trade Alert last night for the S&P was 37.35 and 37.35. Let's try that again. $37.35. Now, important prices, important areas are almost always tested. However, in this case, price did not come back and trigger a second or third time. Most days, once an alert triggers, there's a higher probability of it making a run, coming back and triggering a second, maybe even a third or fourth time than not. So from 37.35, we did not get an exit signal until right here. You'll notice as the trade starts off, the step line is on the left side of blue and climbing. As the market starts to run out of steam right here, the step line crosses to the right side of blue and climbing. So had you gotten out right here, for as an example, that would still be about a 4-point trade worth a couple $100. But the exit signal doesn't show up until here. Once the step line crosses from, on a long trade, when the step line crosses from the left side to the right side of blue and climbing, we're looking for the first red candle that closes below the step line. So the exit signal for this alert is 37.44 and a quarter. 37.44 and a quarter. That's the market telling you that this move may have run out of steam. You might want to take your profits. So from 35 to 44, what is that? 9 points at $50 a point. $450 per contract traded. Now, if you're following the 2420 blueprint and you're building your trading size by the blueprint, once you have earned the right to trade 10 contracts based upon your performance and your profits, this $450 move is also a $4,500 move. With one contract, it's $450. With 10 contracts, it's $4,500. With 2 contracts, it's $900. Okay? But it takes patience. Everybody wants to just dive in. Hey, I got 10 grand in my account. Man, I just want to start making $1,000 a day. If you approach it that way, chances of you ever making $1,000 a day are very, very slim. Take it slow, take it easy. You know, all the guidelines and coaching and teaching and rules that we have, you know, those aren't arbitrary. I mean, we didn't just make this stuff up. It all exists for a reason. Now, if you follow everything to the letter, that still doesn't guarantee that you're going to be a consistently profitable trader. Anybody that tells you that they can guarantee you that you're going to become a consistently profitable trader, well, they're more interested in your money than you are, because they just lied to you, because nobody can promise you that. We can give you the knowledge. We can put the tools at your disposal. But ultimately, your success or failure lies with you. and your ability to learn, follow instructions, be patient, and exercise self-discipline. And those are two things we can't give you. Nobody can. The patience and the self-discipline, that has to come from deep down inside. That's why it's so important that you stay in that simulator till you put together at least 10 consecutive days in a row where you reach your goal, 10 trades or less. Now, even though you've just put together 10 days in a row, when you go live, when there's real money on the line, your whole way of thinking is going to change. Chances are you become a nervous wreck. It happens to more people than it doesn't. Okay? That's why you start with one contract. Okay? If you make mistakes, it's not too expensive. That one contract is really to kind of get you used to being live. Now you can bridge that. You can go from the simulator to the mini contract to the full size E-mini. Most people just go from sim to this contract that I'm showing you right now. Remember, we don't want to risk more than $300 per contract per trade, less when possible, based on market structure, using the 3-step methodology that I teach all of our traders. So with one contract, from the entry to the exit signal, $450 per contract traded. Now, bearish cross, big deal. If we scroll back, we had a bullish cross on the 27th. Now again, this green line is called the BBC. When price is above it, we anticipate higher prices. And when price is below it, we anticipate lower prices. So Sunday night, Globex open, this past Sunday night, we had this huge wide range candle, and it created the bullish cross. So we did a leg and a retracement. The pullback to the BBC holds more often than it doesn't. So we pull back to the BBC, it holds. We take another leg, pull back to the BBC, it holds. We take another leg, which almost touches the highest weekly trading zone. We came within 2.25 points of hitting the highest weekly trading zone for the S&P. Price consolidates sideways here for a number of hours. Remember, these are 30-minute candles. And then price closes below the BBC. If you notice, going back to where we had the bullish cross, even though we touched the BBC, not one candle closed below it until here. That's your first heads up that we may be, well, your first heads up is not being able to make it all the way to that zone. Then red and falling kicks in. Then you get a close below the BBC. And then, boom, bottom sort of falls out. Now there's two numbers, two concierge trade numbers for each market. The short side is at 37.11. We haven't traded that low yet. Now I've got a lot of zones on my chart from previous weeks, so we should clean that up a little bit. Buy 37.35, sell 37.11. That's the Concierge Trade Alerts from last night. Now that zone up at the top, 37.50/51, is the highest weekly zone. Below that is 37.22/23. So let me do this. Okay. So we went from zone, up to the zone, back down to the zone. This 37.17 is a previous weekly zone, but notice how price respected it and consolidated. Only three things happen at a weekly zone. The most likely thing, the one we see again and again and again, is consolidation. Second is rejection. The third and least likely, but it happens, we call that the slice. That's when price slices through a zone like it's not even there. Now, I said 37.17 was still important here. It's still important here. That zone came from the week of December 6th. December 6th. Okay. Still holding sway over the market. Now below 22.23, so this is this week's highest weekly zone. This is the second to the highest. Third to the highest is 37.08. 37.07/08. Now this one, 37.05/06, that was a weekly zone last week. And 2 weeks before that. Okay. So it served us well, but I'm going to go ahead and get rid of it for now. 37. Oh, this is this week's zone. 37.07/08. Okay. I'll make this one different color. Okay. So the yellow one is a previous weekly zone. This week, this week, this week. If price continues lower, right now we're consolidating at a weekly zone. That's the most likely thing to happen. Just like we consolidated here, consolidating here. If we continue to drop, and we have a short trigger at 37.11, and then we have a zone right below that at 37.07/08. So if you get short at 37.11, your trade to target is only 3 points away. 3 points, $50 a point. It's $150 per contract traded. If you're a 10 contract trader, it's $1,500. Okay, but it's important to be aware that if you trigger short here, we don't anticipate that trade going very far. We expect this to be good support until proven otherwise. When price moves up, the zone is resistance. When price comes down, the zone is support. Now, just as we didn't quite touch the zone up here, we spiked the zone here, but it's still holding. Okay. What's the high probability move from here? The high probability move from here is that buyers will rally us up to red and falling. If buyers are truly committed, they may be able to rally us all the way up to the BBC. But if buyers can take us here, then we expect a move back down to the zone. Why? Because a pullback to the BBC from above is support. But as we pull up to it from below, we expect it to be resistance till proven otherwise. Now, just having these indicators and these zones on your chart, ask yourself a question. If you know that blue and climbing represents bullishness or higher prices, if you know that being above a zone means you're going to probably try to get to the zone overhead, if being above the BBC is itself bullish, then how hard is it to be long for at least part of this move? Now this move went from 37.23, it went over 20 points, okay? Now, with just one contract, from this zone up to the swing high, it's $1,000. It's over $1,000 per contract traded. 10 contract traders, 10 grand. Everything is color-coded for your convenience. You're above the BBC, you got blue, let's rally. Price is below the BBC, red and falling. It's the beautiful thing about futures. You can make just as much money in a falling market as you can in a rising market. You can also lose just as much money, okay? Imagine all the people who tried to short this thing. We would never dream of trying to short this because the writing's on the wall. And just think of all the people that have been trying to buy this. We would never do that. Every alert in the channel is based on the 30-minute trend. If the alert says buy, then that means we're above the BBC in that market. If the alert says sell, then that means we're below. And as price dropped, we expect this to be support. We expect this to be resistance. It was. Expect this to be support. It is. Buyers come in, bounce us up to this resistance or this resistance. Then we continue with another leg to the downside. That's the next high probability move. Now, once you learn our strategy, learn how to read a chart, understand how markets work, you'll be able to do the exact same thing that I just did. Bring up a chart and instinctively know what the market's doing, what its goal is, and whether it's succeeding or failing at achieving its goal. I just told you that buyers come in, they'll rally us up to this point. If they're truly committed, they'll rally us up to this point. But at this point, we anticipate another move to the downside. Couple weeks. I'd like to say I can teach you how to trade in 7 days, but I'm going to refrain from saying that because I don't know how quickly you can learn. But I know that we can give you the information you need and teach you how to use the tools in 7 days. The rest is kind of on you. Now, where we differ from a lot of the places that you might have attempted to learn how to trade before is in this. 2 hours of live training every trading day. This is a live environment where you can ask questions and get answers, and then ask another question and get another answer till you understand. 2 hours a day for life, every trading day. Private one-on-one mentoring. We do 2 hours in the morning of live training, 2 hours in the afternoon. I'm doing it right now. It's 4 hours a day, 20 hours a week, plus 2 hours on Thursday night. That's 22 hours of live group instruction every week. And if there's something you still don't quite understand, you can book a one-on-one mentoring session. Doesn't cost you a dime because the passport gives you everything we offer for life. One price, one time. No upsells, no recurring monthly fees. One time, one money. How much? $5,000. I hate those webinars where the guy pitches and pitches and pitches and pitches. And you're just sitting there going, dude, I wanted to buy an hour ago. If you just tell me the price, I could make a buying decision. So we don't hide that. We're not ashamed that we charge $5,000. In fact, I think that's, I'm always after the other guys to raise the price because I think it's too cheap. But we also want to respond to the current economy. I mean, it's tough out there for a lot of people. And with the new guy in Washington, it may get tougher. Okay? There's going to be foreclosures and evictions, and I hear people are going hungry. In Arizona, I don't know if it's because of our proximity to the border or what, but there's an abundant amount of food in Arizona. And it may be that a lot of people don't know where to go, but we got food banks and churches and all kinds of civic organizations. They got literally more food. We went to get a food box the other day for some people we know in need. So we went to get them a box, and the people giving out the boxes said, could you please take 2? Yeah, we'll take 3 if you, oh gosh, thank you. So I don't know if we're just blessed in Arizona, or if all these other states, I don't know why that is. But if you're hungry, I guess come to Arizona. Okay? So in response to the current economic situation, certainly no time to be raising the price. It's $5,000. But the good news is you never pay us anything else. You have access to unlimited one-on-one mentoring as long as you need it. Okay, let's go to the Dow and let's move quickly through the rest of these markets. I know I was teaching last night in the discussion group, and I was demonstrating the Fibonacci price extension tool on a 30-minute chart. You just saw me use it on the daily chart. So I connected this low to this high to this retracement low, and it projected these prices out into the future. And we hit the 50% Fibonacci price extension almost to the tick. That's also the highest weekly trading zone for this week. Now, there's no way I could have known on Sunday night that this would be the 50% Fibonacci price extension, because none of this stuff had happened yet. That's what I mean when I say when two separate things come together. So we already had the weekly trading zone in place. So last night when I used the price extension tool to see where price might be going, I was like, oh, look at that. 50% price extension and the highest weekly trading zone. Two things telling me that this could be the high. Certainly for the session and possibly for the week for the reasons we've already discussed. So we've got the highest weekly zone at 3,500/505. And then the next zone below that for this week is 3,325. 3,325. And then below that is 3,250. Okay. And then below that is 30,080. Right on it. Okay. Now again, these numbers came out Monday morning, 6:15 a.m. Eastern. That's when we publish them each week for all of our members. We've published the zones for our members since December 14th, 2009, so over a decade. And they've worked as beautifully every week. There's some weeks we blow out the upside or fall through the downside, you know, the lowest zone, but it's kind of rare. But it happens. We're not perfect. Now, high probability move from here. Got a zone overhead, zone below, red and falling here. It appears that buyers, you know, we've got a low, we've got a higher low. So buyers are at work. I suspect that they're going to rally us up into red and falling, which happens to be right at a weekly zone. So I expect that to be good resistance until proven otherwise. And that good resistance should provide us with another leg to the downside, where we come into this area and this zone, which should be good support. Last night's alert for the Dow was to be long 3375. $33.75. Okay. 33.75. And we ran up to 3,500, the highest weekly trading zone for this week on the Dow. We hit it spot on. The zone is 3,500/505. We hit 502. Okay. So that's 175 Dow points at $5 a point, $875 per contract traded. Now, the exit signal, now that calculation was based on the swing high at the zone. If you're waiting for the exit signal printed at 34.58. 34.58. Okay. So from the exit signal, 34.58 minus the entry, 33.75. That's 83 Dow points at $5 a point. It's $415 per contract traded. From the entry, which you found in the alert channel, to the exit signal, which you found on your chart. The short side Concierge for the Dow, 31.75, which is right here. Right here. 31.75. See how price came right down to it. I mean, we're falling. Bang. Important price, important area. The swing low was 31.66. So did we overshoot it by a couple points? We did. Is that unusual? Not at all. Here on the buy side, we marched right through it. Here on the buy side, we marched right through it. As we dropped, we dribbled over the line and caught a bounce. You don't have to trade the first touch. If you don't trade the first touch, as in this example, you may get left behind, but that's okay, because there will always be another move. What happens is we wait and we wait and we wait for the high probability, low risk opportunity. And we can sometimes, we're tired of waiting. And so we just take it. Remember I said two important things we can't give you: patience, self-discipline. You can wait for the second trigger. Sometimes the second trigger doesn't come. Which leads me to the next point. We trade every market exactly the same. We trade the S&P the same way we would trade pork bellies if we traded them. NQ, gold, crude, all of them. Every market you see us talk about, we trade them exactly the same. Same indicators, same strategy, same underlying principle, same everything. So if the Dow's not giving me the setup I'm looking for, I can sit here for hours and wait for the Dow to set up. Or I can go check the S&P and check the Russell and check the NQ. I can check all of them. Every now and then, you'll find yourself in a situation where not a single one of the markets you follow is giving you a setup. Well, then you got to wait and be patient. Chances are, when you sit down at your computer, whatever time of day or night it is, between the S&P, Dow, Russell, NQ, crude, gold, and silver, there's a good chance that one of those is setting up, or has already set up, or is getting ready to set up. So it really decreases the amount of time that you have to spend in front of the charts each day to reach your financial goal, whatever that is. Most of our traders are shooting for $100 a day per contract. Whether you do it with the S&P or the NQ or the Russell, doesn't matter. You're just looking for a market that's moving, that is providing you with a window of opportunity, that's a high probability, low risk trade setup, and you execute. If you get your goal, you're done for the day. As you increase your account balance, once you increase it by $2,000, you add a second contract. The blueprint will tell you when it's time to add number 3. The important thing is you only add additional contracts with profit you earned in the market. The first contract's got to come out of your pocket. But if you follow the blueprint, any additional contracts that you trade above the first one should be funded with profit. Okay? All right. So that covers the Dow. Let's go to the Russell. The Russell was the first one to fall out of bed this morning. The alert on the Russell was to be short 1989. So, 1989. I believe that's an old zone there. Let me look. It is. That's an old zone. This week's zone is at 45.46. That's the lowest weekly trading zone this week for the Russell. The swing low was 46.6, so we missed it by 6 ticks so far. But it looks like we're going to come down, make another run at it. So from 89 to 49, that's 40 points. At $50 a point, it's $2,000 per contract traded. For the 10 contract trader, that's a $20,000 move you're looking at. Is it worth waiting? Is it worth being patient? Is it worth exercising self-discipline to earn your way up that ladder in regards to the number of contracts that you can trade? I guess you have to make that call. NQ. Concierge last night said to consider being a long 12,880. Okay. Buy 12,880. Swing high was 12,898. So that's 18 points. NQ pays $20 a point. It's $360 per contract traded. Important prices, important areas, almost always tested. Price gets back below the trigger, finds support at the BBC, and runs all the way up to 12,918. Short side for the NQ, 12,765. Haven't got there yet. Okay. Next on the list is crude oil. Now, our indicators not only help you find high probability, low risk trade setups. See this here? Now, on a 4-tick range, it might look like you've got opportunity. But if you flip over real quick and look at your 30-minute chart, you can see that things are kind of tied in a knot. You don't want to trade this. This will drain your account. You want this. You know, when you're building a leg, that 4-tick range gives you a long entry, bada boom, bada bing, get your goal for the day, get down the road. Okay, Concierge alert was to be long 48.75. Hasn't happened. And the short side is 47.40. So from a Concierge standpoint, there's been no trigger on crude. The market's basically gone sideways. Why trade that when you can trade that, right? Sometimes people lock themselves into, I only trade this or I only trade that. And that's okay because it's your trading business. You can do whatever you want. But why lock yourself in? Why miss that opportunity because somebody somewhere convinced you that you should only trade the S&P or you should only trade crude? Again, it's up to you. You get to make the call. It's your business. We just teach how to run it. Oh, we missed gold. Gold. Oh, that's because there wasn't much happening. The alert last night for gold was to be long above 1891. Swing high was 91.3. It went just 3 ticks over the long side. And the short side was 1872, which could still happen. And then the last one, silver. This descending price channel. Now, we are very bullish on silver. We would love to build a core position in silver. We're going to try to do it using the smaller contract. But the time is not right yet. Now, if we had unlimited resources, we'd just start buying now. But here's the thing. If you go long now, and this thing drops some more, you've got to defend that position. Again, if you got a huge account, then you can defend it till the cows come home. But if you don't have unlimited resources, then market timing becomes important. So last night on silver, long above 26.67. Looks like 26.67. Okay, so it went up a dime. 2 pennies is $100, so that's a $500 per contract move. The short side was 26.22. So there's another dime, or $500. And then here's another one. Okay. Markets are ripe with opportunity. Some of the markets. Some aren't. Learn to know the difference. That will serve you well. All right. Hopefully, if you're listening to this broadcast, you're also participating in the open house. If not, go to eminitrainingschool.com. eminitrainingschool.com. You sign up. Valerie will send you out all the stuff you need to participate. Now, that email that she sends you has a lot of information in it. Everything from how to set up Telegram to the invitation link to connect with our private Telegram channels, how to set up your platform, how to set up your charts, how to install the indicators. It's all there. I get into mentoring sessions with people who are on a trial, and I hear things like, well, I don't know, what's Telegram? Well, it's in the email you got. Oh, I didn't see it. Okay. I'll ask her to send it again. So if you're already on the trial, go back and look at that initial email she sent you. If you're not on the trial yet, then go to eminitrainingschool.com, get on the trial, and then when that email comes in from Valerie, treat it like the freshest cargo that it is. Okay? Good word for the day. Genesis 35:15. Jacob named the place Bethel. This is about going back to where you first met God. Do you remember where you first met God? You might say, well, I was raised at a Christian home, so I've known God all my life. Now, for most of us, there's some point in our life where He was no longer the God of our mother, our father, or our grandmother, but He became our God because we found ourself at the end of ourself And at the end of yourself is typically where you find the beginning of God. Whether it was a health crisis or some other crisis, the human life is fraught with crises. Yeah. And it's in that darkest moment, in the deepest valley, that's usually where we find God and begin to develop our own personal relationship with Him. What should you do when you're discouraged and afraid you've lost your way? That's the question Jacob was facing in Genesis 35:15. And when he turned his heart towards God, here is the answer he got. Go up to Bethel, build an altar there to God, who appeared to you when you were fleeing from your brother Esau. So Jacob said to his household and all who were with him, this is Genesis 35:1, get rid of the foreign gods you have with you and purify yourselves and change your clothes. Then come, let us go up to Bethel, where I will build an altar to God, who answered me in the day of my distress, and who has been with me wherever I have gone. Now, you may not be into idol worshiping, but what do you need to get rid of? When we read about idols in the Old Testament, we think of little statues or different kinds of things, but fast forward to the 21st century, we have modern day idols. I know people here in Arizona, the Arizona Cardinals are their idol, or the Diamondbacks are their idol. It can be music, it can be TV, it can be a person. It doesn't have to be a little statue that you bow down and worship. But have you ever noticed at a football game how similar the behavior of the people can be to people at a Pentecostal revival? A good old tent meeting, huh? Here's the deal. You're going to worship somebody. It's a really good idea to determine today, if you haven't already, determine who you're going to worship. Because I promise you, you're going to worship somebody or something. When Jesus returns, I hope he finds me worshiping God. Bethel means the place where God dwells. So Jacob went back to the place where he had met God, where he had received a vision of his future, and where he had first experienced the joy of living in a covenant relationship with the Lord. Now, maybe you've made a mess out of your life, have you? Most of us have at some point. Maybe you're in the middle of a mess. Then go back to Bethel. Go back to where you first met God. Build an altar and place your life on it. Do what the scripture says. In view of God's mercy, offer your bodies as a living sacrifice, holy and pleasing to God. This is your true and proper worship. Do not conform to the pattern of this world, but be transformed by the renewing of your mind. Then you will be able to test and approve what God's will is, his good, pleasing, and perfect will. Romans 12:1. That's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.